Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. This week we get a huge dose of central bank policy decisions, starting with the Reserve Bank of Australia, and then we have the US Federal Reserve, then we got the Bank of Japan and also the Bank of England. Right across the board, it is widely expected they will all keep their rates unchanged, but still keeping an eye on the policy statement. From all the central banks, we might get a bit more of an insight of how they view any rate cuts in the near future. Along with that, we also get a vast range of economic data with the Australian employment and also unemployment figures, with a forecast holding around 40,000 new jobs added for February. And in addition with that, it is expected to see the unemployment rate to decrease from 4.1% to 4%. Meanwhile, the dollar index, which measures the greenback strength against a basket of 6 major currencies, was flat at 103.45. As we can see now, the market is close towards its key level, seen at 65.45. And I do anticipate the market to rebound from this level and eventually reclaim the top side around 66 cents and move on towards 67 cents. Therefore, it could give opportunity for the bulls to re-enter the market around this region. Moving on to the euro, we can see the market still a little bit soft after last week's CPI data come out in the US was a little bit on the hotter side. Nevertheless, I still feel the market has potential to gain and recapture the losses and therefore look towards 109 to 110 as a potential target, and with the support seen at 108.70 and reassess from there. The dollar yen a little bit stronger into the start of this week, with all eyes on the Bank of Japan and see if they consider ending its negative interest rate policy, the NIRP, this week at its meeting. Technically, I feel the market is heading close towards the top side of the range, and that is anywhere from the region of 149.30-40, and with a cap around 149.70 should see the market head lower and back towards its preferred target of 146.35-45, which took 3 challenges and was rejected. With Super Thursday this week, all eyes will be on the Bank of England, but no doubt the market is expecting no change there, but more to the policy statement, which will play a crucial role. Along with that, we also get the headline inflation to see if it has eased by 3.5% year on year from January's 4%. Nevertheless, the market is a little bit weaker since the posting the bearish outside range day, so therefore we could see a move towards 127.20 and reassess from there, as a break could see further stops towards 126.65 and then possibly from there see a rejection and move back towards its topside target of around 128 to 129. Wrapping up with gold and oil, the market's a little bit weaker, but I do anticipate a bullish return from the level around 2,144 to 46. If so, we could see another rebound and look back towards that topside target around 2,184 to 88 and reassess from there. Oil reached its objective of $81 on Friday and still holding potentially to a bullish case, with the ADX firm, and also the market is holding to a bullish bias for the RSI and the MACD. If we clear that 81 figure 15, then it looks towards $83 a barrel, which was given by this inverse head and shoulders. But traders should reassess at these key levels and adapt strategies in case of a potential correction, being bearish, and therefore could see a pullback towards 78.5 as an initial target. Nevertheless, as I mentioned, it is bullish overall, so I do expect to see further gains into the start of this week. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.